The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks, we'll come on back here to the Diagnostic Trading Hour. My name is Darrell Martin here on TFNN.com. Don't forget you can listen to us on your mobile phone at TFNN.mobi, live inside the e-signal platform. And, of course, on your computer, you can see the charts that traders are using right there at Tiger TV. And let me check right here. We'll get that chart posted right up to you, okay? So get that coming on over, and you ought to be seeing it in a second now. I think I just maximized over the wrong screen. And that ought to solve that for you. Okay, there we go. Looking at where some of the markets are at right now, we got oil is down $1.91. Basically, if you were trading today, you should have made money as long as you weren't trying to fight every trend along the way. Because it was pretty spelled out on this massive, nice drop this morning, and gave some nice, clean turnarounds in the entire process going with it. And, hopefully you've taken some of those profits and you're going to go enjoy yourself for the rest of the day. After that solid deviation move we got across the board, we'll take a look at some of those here in just a moment. Again, oil down $1.94 now as it keeps coming on down. We got dollar index is currently up $1.14, so 1.14, 1.135 right now. We got S&P down 26 points. This is the way to come back from a holiday, no doubt. Looking on over at gold. Gold is currently down 17 points. We got copper. Copper is down as well, along with silver gets some good moves. We got natural gas down 0.094. Looking on over at, let's see, we got the Russell. Russell's down 16 points. Dow's down 241 points on the day. Going over to bonds. Bonds got some big moves, up 2.17 right now. That's massive. We got corn is down 5 points. Soybeans, being the quiet market out of the bunch, down 1.5. Our FX pairs, we got some quiet ones, so we got some loud ones. We got Aussie yen right now is up 8 pips. We got the Aussie dollars down 76. The euro pound down 21. Euro yen up 38. Going over to euro dollar, it is currently down 84, with the pound yen up 126 pips. Pound dollar down 78. Dollar CAD currently up 116. The dollar franc up 45. And U.S. yen up 127 pips on the day. All right, well, that catches you up on just the current market wrap. And let's go ahead and catch up on some of the just top news for the day and go through that with you. Some of the top headlines that I've seen roll across, and top doesn't mean the most important, but just, some of the things that, are worth mentioning. European stocks obviously joining the sell-off that's been happening. The euro dollar dropping down to fresh 1 month lows. Let me go ahead and pull up just, let me see if I can grab a basic 10-minute chart for you. And if I can, then we'll open that one up and walk in and through some of these charts with you. We got gold down 2. That's right, 2 deviations. Moving on down right now, it's at 1187 from 1188.8. So it's been flying on down. But we can go on down, and of course we got, just looking over at, we'll just say the S&P. S&P, like I said, moving down solid and tumbling after Greek talking all their debts and everything else, down 1.5, down 2098.5, and bouncing right now, by the way, to the tick right off of -1.5 deviations. Just sort of sitting there trying to decide if it's time to keep going or not. And things starting to come down after the first real retracement. A little bit of a pop right there. One last, oh, man, I just woke up and I want to sell the market group came in. And final take profit coming in. And that's why you're seeing a lot of volume right there on those 10-minute bars. And on that last 10-minute bar there that just closed out 1310. Now, that's not like it's not a magnet level, but it's a level, this time of the day worth noting that a lot of people are taking profit. A lot of last-minute sellers trying to come in and not working out as well for them. Let's see here. Going in and pulling this up. Make sure that's coming through for you. All right, so we'll go ahead and look on over at the DAX, and let's pull it on up, FDAX, and load that chart. We'll do a little analysis on it. We'll take a little gander over across the different pairs here. DAX flying on down. Actually started a little earlier for us, and but just kept coming down to 2 deviation move, and it did its first pullback right there at 1, as you can see, and then it oscillated, bounced for a good hour or so, solid right there between 1.5 and 2, broke through it with some high volume. That last bit of breakout traders, take profit traders, everything else going on, popped back up, and now it's just sort of, again, doing that same little oscillation dance right between that area. So the move was great. It was nice, but the move is probably pretty done right now. Going on over, looking at the FTSE. Let me see if we got, we'll go over here, look at the life of FTSE here, and just look at some of the European stocks and British there. And then, so anyways, FTSE on down 2 deviations solid. And I mean, you cannot ask for a smoother trend, and often ignored, by the way, market by many traders. But, it can have some just when it does trend. Okay, when the market's trending, it's a really smooth trend. So you get those nice trending days. You notice you don't really get a whole lot of that oscillation happening. Just really smooth trends compared to some of the other ones we looked at. You can notice how just easy and simple that is. And that ticks in 0.5, so a little bit different than what a lot of traders are used to. Let's see here. And what else do we got? We got the US PMI moving pretty big. Let's go over. Let's pull up our euro dollar chart. And these are the lowest levels since January. So we're getting some surprising moves coming on out of the news. And let's see, what kind of move does that give us from 8 a.m.? Okay, a much bigger move than normal. 8 a.m. over here to 10. Right there. What did we get? We got a 20 pip move on our FX move right there. We expected it to be around 30 pips from the news plan I went over with you last week. So hopefully you were able to follow along with that as I walk through each one of the news releases and talked about what news reports were coming out and what expectations were there. We still got a big move. I mean, it was more than I would say I expected, probably more than most of you expected if you're trading that trade. But it still did a pullback on it, and in that sense really didn't surprise us that much. It moved down 47 pips. So if you're going in and you're following along with the news plan where I'm like, hey, we're going to do a 30 pip iron condor on this trade, where when I say iron condor, I mean really simple. Buy the spread below the market, sell the spread above the market. Okay? So not that hard, not that fancy. And just make sure that the maximum profit when combined together is a minimum of the expected move. And so if we go in, and I was working on it with a trader on this last night, and he was asking a few questions on iron condors. And let me pull up this trade. We had the core durable good orders coming in right here. And the core durable good orders are like, hey, enter at 8, look at 10 o'clock, and look for a $30 minimum profit. Well, if we got $30 profit, that means it could move up 60 and down 60 before we were at basically a 1-to-1 max loss to max reward scenario with a stop, okay? And so it moved down to 47. Hey, we're still good. Pulls on back up. We don't pull in a lot, but we do pull in about 10 or 11 ticks on the trade. Now, we had another trade that came in right after that. And just like I said, a lot of reports coming out this morning. And on that trade, we were looking for another 30, but entering at 9 o'clock. And so let's see how that one worked out. 9 a.m. We'll go over here right there. And we said choose a 11 a.m. expiration. On that one, I had only 7 pips of movement. So we locked in 23. So 23 plus 8, we got about 30 pips out of the day on those 2 trades combined. And, even with the massive movements that are happening, still we're able to capture the premium on it. And it amazes me how many traders go in on these in-the-money binaries. I'm not saying I don't trade them now and then, but, I mean, come on, this is so much easier. It's so much less risk. It looks like more risk. But, people don't realize they're trading these binaries. They're going for like $10, $15. It's like, just collect $15 in premium. If it goes against you, how much money are you going to be risking whenever you go in to put on that trade and collect $15 on a binary? I mean, at least 35, 40, 80, 85, if you let the thing all the way to 0, if it does in the last second. These are $1 a tick. And you're just buying the market, like, say, 15 pips below where the market is. So if the market stays flat or goes up, you collect all 15 pips. If it goes down up to 15 pips, you're still break even at the end of the trade. And really is a much better way to trade. And I tell Philip, one thing I do mention is binaries are where the buzz are, spreads are where, the long-term game plan is. So, and traders slowly but surely are catching on. I talked about spreads literally when I did my show probably for the first year, almost exclusively. And then I started slowly bringing in binaries and teaching binaries. But, they were the second instrument I went to. I learned how to master spreads first. And they're easier, and they work a lot better, and they're a lot less frustrating. And I have my moments where I love binaries, and I have my moments where I hate them. Spreads are just sort of spreads. They're just sort of there. They're very unemotional, and there's plenty of profit to be made in them. And so, let's look over real quick. Let's go on over to NASDAQ. And I want to highlight this because this has now become my new favorite Nadex spread. And it ticks now in 0.1 on Nadex. Well, the NASDAQ itself ticks in quarters. Well, on NASDAQ, a quarter is worth $5. There's 4 quarters in a dollar. Okay? On Nadex, it ticks in 0.1 or dimes. There's 10 dimes in a dollar. All right. So 10 dimes in a dollar. So 10 ticks versus 4 quarters in a dollar on NASDAQ futures. NASDAQ futures, every tick is worth $5. There's 4 quarters in a dollar. So if every tick is a quarter and there's 4 quarters in a dollar, then every 1-point move, 1.0 move is going to be worth $20 or $5 times 4 ticks in a point. Okay. US Tech 100 ticks in 0.1. 10 ticks in a dollar, $1 tick, every point is worth $10. So we'll talk more about that when we get back. Stay right there.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Darrell Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, well, I'm back here to the Diagnostic Trading Hour, picking up where we left off on NASDAQ. Got the NASDAQ futures again tick in quarters. So they go 0.25, 0.5, 0.75. Oh, okay. Every quarter is worth $5. 4 quarters in $1, 4 ticks in $1, 4 ticks worth $5. 4 times 5 is $20. Nadex ticks in 0.1 on its derivative spreads. Spreads being the key, not binaries, but spreads. Ticking in 0.1. Okay. 0.1 is a dime. There's 10 dimes in $1. Every tick on every Nadex spread ticks in an increment of a 1, wherever the decimal is, whatever, but the last single digit is always a 1, okay? And it's always worth $1. Makes it a lot easier, okay? Then I have to memorize 20 different tick values. Anyways, but you got 0.1, you got 10 dimes in $1. Every tick is worth $1, so that's $10 a point. Well, if the NASDAQ futures are worth $20 a point, and the spreads are worth $10 a point, then how many spreads does it take to equal a future? 2. Okay? So hopefully you got that down. Hopefully you're following along. Why would you want to trade them? Okay, well, there are a few reasons. Let's take a look and just see how they work. Okay? Let's walk through them. I want you to really get this. My humble opinion, 99% of traders should be trading spreads, not I repeat, not binaries. Not until they got them down. And I know binaries are the buzz, and I know that there's a billion websites and groups saying that binaries are where it's at. And I got that, and I like binaries. Okay, so I'm not anti-binary. But they are much harder to trade. And I've said this. You can listen to shows that I've done a year ago, 2 years ago, and you'll hear me say the same comment. Spreads are a little bit harder to understand. Not a lot harder. A little bit harder to understand. And a lot harder. Okay, sorry. A little harder to understand and a lot easier to trade. Binaries. Okay, binaries are a lot easier to understand and a lot harder to trade. People say, well, I'm risking more money if I trade the spreads. Not really, okay? When you're risking $85 to make 15 on a tenth of a tick settlement value, you're risking a lot, okay? Just because I have to put up more money doesn't mean I'm risking more. So let's go. Let's see, what do I mean by all this, okay? Let's go in. Let's find what spreads. Let's see if we can find any spreads. Everything's moved so massive. Okay, we're going to define some with really low tick values. This is going to be harder to find. This is probably like the worst day to do it because they've blown through the spreads. They've been capped out on profit. Makes me wonder about this like bounce one over here. Let's look at that for fun. We'll pull it up. Now, understand these are Nadex ticks where it says proximity. They are not the underlying ticks. Let's see here. Let me go ahead. All right. So looking at these ticks right here, what is the easiest way? I mean, even the maximum big old spread, it's outside of that, which is amazing. But let's go over here. Let's just look at the little ones just for a second to get it down, okay? Somebody sees this and they're like, well, I'm risking so much. Well, if you're going for like 5 or 10 ticks, or if you're going like 10 ticks a movement or 1 point a movement, you make $10. Look at what the bid offer spreads are. And that's with the volatility being through the roof today. We're talking 1 to 2 ticks. This is the left side is the sell price, the right side is the buy price, okay? And look at that. All right? 0.9, 0.0, meaning you have a bid offer of 0.1 or 0.2. Well, what's your minimum bid offer spread on a NASDAQ future? Okay? If you traded them at all ever, you know it's a quarter. Okay? So again, it's a quarter. Very simple, very easy, but 1/4, which means it's 0.25. You're getting tighter bid offer spreads on Nadex. All right, we'll keep talking about it when we get back after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, here we go. Okay, so we're on the NASDAQ spreads again, and going through this and how this works and everything else, just showing you how tight the bid offers are so you can get that down. And the main reason I'm wanting you to understand how these work is it's pretty simple, the concept here. They're only a tick wide versus 2 ticks wide over on NASDAQ futures. Okay, and you're paying $1.80 round turn, and that's if you're just doing one. Okay, it caps out at $9 per side if you're doing more than that. And so let's go look at it. Let's go over here. Let's look at Ninja Trader Brokerage, which is I'm really excited about everything they're doing. I think they're making things a lot better out there. And they got really low commissions. But let's hop over to their main site. That's what I'm trying to get onto. And I want to look at the round turn cost, okay? So let's go into account fees and not those kind of fees. There we go. Okay, round turn, all in. Give me your money cost. All in rate, let's see, $3.40 up to $4.25, okay? Now let's go down to, it's basically the same. So say you're leasing Ninja or whatever, and you're probably paying more than that, by the way, if you're over on, let's just say pretty much any other platform. You know, $380, $424, $340. So, you know, for $1.80, if you have to do 2 contracts, that'd be $360, okay? So right in between the lease and lifetime rate of the future, but 20 cents difference there. But again, you're saving money also, remember, on that bid offer spread because it's 0.1 or 0.2. If it's 0.1, then you're saving a couple bucks. Okay. If it's 0.2, then you're saving basically $1. All right. So versus the normal, quarter there. So you're saving $1. So between the, fees and the bid offer spread combination cost, you could say, you're actually coming out ahead trading the Nadex spreads. They cost less money to trade. Okay, now what about complexity, bro? Oh, they're so complex. Find the end of day spread normally. Okay, we're way outside of the normal today, right? But find an end of day spread and find the one that's in the middle. Now you can choose these smaller ones, like right now with the market being really quiet. It's moved so much already. You could go in and you could decide to go ahead and trade like some of these middle spreads if you wanted to make some money and all that. And I can say you're shorting this contract right here to go short on NASDAQ. You think it's going to go down a few ticks. Bid offer spreads are really tight. Wouldn't take a whole lot for it to hop on down. And it's really simple. Yeah, you just click open up and it opens up a ticket for you. Okay. I'm just using the scanner here because it's a lot easier to trade off of. And you could buy or sell the same spread. It's right there in the middle. As you can see, we have the risk and reward laid out for you. So if we go over here and we place an order to, we'll just say sell this contract. May have missed it because it was moving so fast already. Talking too much instead of trading. Anyway, so we'll go back over here. Maybe it'll oscillate for us a little bit. We'll get our fill. There we go. Okay, so now we're filled on the trade. And let's go ahead. Let's do 2 contracts. All right. Let's do 2 of them. So we'll go down here. We'll do the same one. And now this is just a 3 o'clock one. So we don't have a whole lot of time on here. We had an hour and a half. And that's enough, But, and we, sell this contract. And then let's watch what happens. Okay. So I got 2 trades on, 2 contracts on. Now, we have a little more premium than normal, okay? So right here, we got a little bit more premium than we're used to having simply because, why? Because, well, there's, have you looked at the VIX? So let's pull that up. Let's show that real quick. And that's just going to push prices a little bit more towards the center, okay? And yeah, so it's flown up to like 14.47. So 2 points is a insanely massive move. If we go in and we're looking at movement, we've got just a massive, nice spike. I mean, usually don't get this kind of IV late in the month. And so we're basically just oscillating right now, making a couple bucks flat, making a couple bucks flat. Nothing real exciting, okay? But if you're a new trader and you want to go in and you want to, risk 20 bucks or make 20 bucks or whatever, this is the place to do it. It's very, very simple. It's very easy. It's low risk. It ticks fast. You get a couple points. You're solid. You're good to go. And I mean, look at how fast we covered our bid offer spread already. All that. Now we are pushing down here on a low. I mean, this isn't necessarily one of those like just massive trades. I'd be all over. I honestly should be in the trade and probably about out right now. The way I trade, I'd be getting in right below that and just grabbing a couple ticks. But we got a potential runner if it decides to keep going. I'd use a little more caution on this just based on where we are on the day, being down here to 1.5 deviation, et cetera, et cetera. But I can go in and I can limit my risk because, hey, there's a good chance this thing's going to pop around, turn around, go back up, and just oscillate into the end of the day. And I don't have to risk massive amounts of money. I don't have to risk $85 or whatever. Okay? I go in, let's say I want to risk, 20 bucks on the trade. Then I can go in and I can place an order to exit the trade should it, get above my initial area, or I can put an order to take profit. So let's say I want to take profit when the market came down, it hit 4461.5 on the underlying. Okay. Well, since they pretty much are ticking about the same, I'm just going here in 4461.5. So I'm going to order to buy it back right there. Okay, so now I have a working take profit order. Boom, that shows up right there in the scanner for me. If I go in, let's calculate what would I make if it did hit that price. Well, I sold it at 44. Sold it at 44.64.6. If I bought it back at 44.61.5, I'd make 3.1. That's 3.1. Remember, it ticks in dimes, so divided by 0.1, that's 31 ticks. $31 times 2. That's $62 on a trade. Okay. Now, when some people look at this trade, they sort of freak out because maybe they see the high risk. It's only $50. It's like an at-the-money binary contract. You can do ones that, are work the complete opposite. Now, people look at this, they're like, oh, man, I'm getting nailed on this. It's going against me. I want to get out, whatever. You can get out of the trade. You don't have to hold the thing all the way and risk $100 on the contract, okay? So you can go in. You can use, I have my stop plugin, and you can use that to make it even easier to allow you to basically manage your risk. So you can trade it more like you're trading futures. So hopefully that'll make it a lot easier for you. But you can go in and you just open the thing up. And like I said, it'll allow you to, from that point, set a stop if it goes up and hits whatever your stop happens to be on the market. Okay? And it's got like worse limits and offsets and, all that fun stuff. I'm trying to pull up the new one because we've been working on it. There it is. And there we go. Here's the new version I got coming up that we've been working on. And it'll allow us to go in and go, okay, well, if it hits X price, get us out. So, it's taken out against us a little bit. Let's just say I use 44, whatever, a 14 tick stop. So we'll say $28 from our entry. And where do we get in? We got in at 44.64.6. Let's add 1.4 to that. So 66. So I can literally go in here, say if it gets to 66, then, get me out of the trade, place the order, and then activate the stop trigger. Pretty simple. And now it'll work for me. And instead of me having to sit there and hold on to the button for the next, hour and a half. All I need is a slight tick move down, and I'll make my, $30 or whatever on the trade. Again, let's go back. Let's do the math on that, because if you can start getting the math on these, and a big key being choosing those middle spreads, okay? So people freak out because they're like, oh, I want the really low risk. And I'm like, yeah, but now you have to deal with optionality and the option moving slow and all that. So again, 44.64.6 minus 44.61.5, $31, okay? So I will make $62. $62 trading these two spreads. That's not bad. Buying a $50 binary to make 30, and I'm not risking $50. I'm not going to let that thing go 5 points against me before I get out of the trade. Okay? Let's say the market expires. I sold it at 44.64.6. Let's say it expires at 44.64.7. You know what I lose on the trade? $2. That's it. 2 simple flat dollars is what I lose on the trade. So really, really simple, really easy. And moves fast, moves with the market for me. And now we just got to, have the market, move down and hit our price. So it just needs to move a couple more points down, and we will be out of the trade. And that's, it's different when you buy and you sell. That's why I'm like, they seem hard to understand, but they're actually easier. Like, it makes sense where the price comes from. It follows the market. Other contracts that are like on the top of the list there. By the way, that's equal to one future contract. And you know how much we put up to trade it? We put up $100. You know how much we could lose if the thing just blew against us completely? $100. Okay. Gold is also an awesome one. Unfortunately, it is closed. It closes at 1:30, but it is usually about a tick wide. Some of the other markets are actually not as bad as they might look. Like if we look over here at the S&P, and on the S&P, we go and we look at that trade and look at this right here. It is about 0.4, 0.4, 0.5. That's like 2 ticks instead of 1 tick. So it looks massive, but remember, it ticks in 0.1 on Nadex. So, an extra tick to have to find risk. If you've been in a flash crash, you know what I'm talking about. That is worth it. Let's look at the Dow, look at small caps. Some of these may have wider bid-offer spreads. They may not be contracts that you like. And I'm definitely pushing them to tighten those things up. This is 4 ticks wide. Yeah, that's a little wider than I'd prefer over on the Dow, but, not too horrible. Go over here to small cap. It's about 0.4. So, instead of like 1 tick or 2 ticks there, you're getting 4 ticks. So a little bit wider on some of the spreads, but like I said, NASDAQ and gold, they're either on par or cheaper. Not really cheaper. Gold would basically get at 0.1 or 0.2, just like, gold futures, which will basically be 0.1 in most cases. Every once in a while it'll be wider. But, the other ones, you're looking at about 3 or 4 ticks wide. It's not some like ridiculous number. And people look at it and, they're like, well, I don't know. That just seems really, really expensive. I'm not sure if that's a good idea. Like that, those spreads are so big, and they're comparing the underlying market to the futures market. All right. So that really is the big case here. They're comparing the underlying market to the futures market versus comparing it over here to an option market. And you can compare these puppies side by side with CME and they beat CME most of the time hands down on bid offer spread. So they have very, very reasonable bid offer spread happening on these contracts. And if we go in and we look at them, let's see here. We're looking at a Aussie right now, 3 ticks wide. That's not a horrible bid offer. Euro dollar, about 3 ticks. I know you can get like 1 tick wide and all that stuff, but you also have S&B jacking up the world, right, and closing down binary brokers, and FXCM having to be bailed out, and companies losing hundreds of millions of dollars on one Swiss announcement, one Fed announcement. You don't have that issue. Nadex is not subject to that issue because everything has max risk, and max risk is put up at all times. But you still get massive leverage, such as controlling a mini lot for $25. Come on, literally, you're controlling a mini lot for $25. What does that mean? Is that a good deal? Is that a bad deal? And I try to get people on these spreads. I try to help them understand, it's such a better, safer, easier way to trade. But if we go over here and we look at this, 1.0, if I get my hand on the right button, 1.0876. Okay, you're doing 10,000 units of currency on a mini lot. So 10,000, okay? And then you're getting 50 to 1 leverage. $217 is just your margin, plus your floating P&L that you're going to put up if you want to trade that on spot Forex. Come on. $25, $217. And $25 max risk. $217 isn't even a max risk. It's a no-brainer. Stay there. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back to the Diagnostic Trading Hour. And so I'm just trying to go through and sort of help you see, how these spreads work, and, how you can take advantage of them. And when they go against you, it doesn't hurt near as bad as like it does on a binary, okay? And there's just a lot of ways to trade them. Now, I mean, you can go in, you can do neutral trades, you can do breakout trades, you can do directional trades. And depending upon what trade you're going to do, it's called an option for a reason. You have options. You have choices. So we'll determine what choice you make when you're making that trade, okay? So you do need to learn a little bit, but if you want to keep it simple, okay? Now, I talk about the iron condors all the time, but probably we should do a show just wrapping up iron condors for you again and making them really simple for you. And maybe we'll do that on Thursday. Let's do an iron condor step-by-step review, okay? But if you want to keep it simple for directional trading, it's really easy. You're just going to go in and you're going to trade the spread that mirrors the market. It's going to be within like 5 ticks proximity of the market, okay? And you're going to want at least 0.7. So you're going to go up here. You're going to change this to 0.7. You're going to change this to a -5 and a +5, okay? And that's going to give you, one contract. Usually it'll give you a few contracts, today being an exceptional day because of how far the market's moved. Normally, you're going to want a end-of-day expiration so you can take advantage of that movement. Okay. Now, right now, we're able to sell a spread above the market, which is rare. There's so much premium in there, like right at the money is actually above the market. So we're actually, in a sense, collecting premium on the market right now, because we sold at 44.64.6 and the market was lower than 44.64.6. We sold above the market. So the market literally just stayed flat. We would end up making money. And let me show you what I mean. Okay. Look right over here, 44.63.75, 44.64. And they have the indicative at 64.8 right now. So we actually, not the indicative, but the current price. So we actually have some premium in our favor, which means we didn't pay any premium. We're collecting it. It's always good to understand what that proximity means and be on the right side of the proximity, because you can actually be the collector versus the payer of the premium. And I like to collect premium on my trades. I'm sure hopefully all of you like to collect premium on your trades. Let me show you. Normally what we're going to see is you're going to see negative premium, okay, on a sell. So let me just find a normal market that hasn't just exploded today. Let's go with corn, okay? Notice how most of them, except for the one that's just like ridiculously out of the money with no profit, notice how you have a positive number on proximity, and over here you have a negative number. One of them has a positive number, okay? Normally they all the cells have a negative proximity, which means you're selling, the market's a little bit, it's actually you're selling 9 ticks lower than where the market is. You're buying 9 ticks above where the market is. Right now, there's so much premium built in, it's actually throwing things off a little bit. And check it out, all of our spreads, okay, have positive numbers. Now, most of these you can't make anything on. 1.20, 1.2, that's all useless. Okay? But these three spreads right here have a positive premium. And when you start getting premium, spreads start getting exciting because you're actually able to sell higher than the market, buy lower than the market. And if you understand that concept, if you chew on that for the next day, come back on Thursday. We'll talk about how to make money with that concept even more. Y'all have a great day, and I will talk to you next time on the Diagnostic Trading Hour.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.